This is Finance Spotlight, brought to you by ThinkSpace Media. Investing in the stock market has always been a delicate dance between science and intuition, a realm where fortunes can change with the tick of a clock. When I decided to pour $1 million into the stock market, it wasn't just a financial decision. It was a leap into the unknown, a gamble that promised either triumph or disaster. The stakes were high, and the path ahead was shrouded in uncertainty. Little did I know, this journey would unravel in ways I could never have predicted, teaching me lessons that no textbook could offer and leading me through a roller coaster of emotions. So look at in this video how I spent $1 million on stocks. And this is what happened, and don't forget to subscribe, like, and share your thoughts in the comments sections. The beginning, crafting a strategy. The first step was to determine my investment goals, risk tolerance, and time horizon. My primary goals were capital appreciation and long-term growth. Given my moderate risk tolerance, I aimed to balance my portfolio with a mix of growth stocks, value stocks, and dividend-paying stocks. I spent several months researching various industries, companies, and market trends. I analyzed financial statements, earnings reports, and listened to earnings calls, focusing on companies with strong fundamentals, competitive advantages, and promising growth prospects. To mitigate risk, I diversified my portfolio across different sectors: technology, healthcare, finance, consumer goods, and energy. Here's how I allocated my $1 million investment. When I first decided to invest $1 million in stocks, I knew diversification was key. So I broke down my investment as follows: $300,000 in technology, $200,000 in healthcare, $150,000 in finance, $200,000 in consumer goods, $100,000 in energy, and kept $50,000 in cash reserves. Over 5 years, each sector performed differently, yielding varied annualized returns. Technology at 20%, healthcare at 12%, finance at 8%, consumer goods at 10%, and energy at 5%. In the technology sector, my $100,000 investment in Apple skyrocketed to $250,000, and $50,000 in Tesla grew to $200,000. Healthcare investments in Pfizer and Amgen also performed well, with Pfizer growing from $50,000 to $70,000, and Amgen from $50,000 to $75,000. In finance, J.P. Morgan Chase increased from $75,000 to $110,000, and BlackRock from $50,000 to $75,000. My consumer goods investments saw Procter & Gamble go from $75,000 to $110,000, and Coca-Cola from $50,000 to $80,000. Energy investments had modest gains, with ExxonMobil growing from $50,000 to $60,000 and NextEra Energy from $25,000 to $45,000. Additionally, I earned an average annual dividend income of $25,000, totaling $125,000 over 5 years. By reinvesting these dividends, I gained an extra 3% annualized return. All in all, my initial portfolio of $1 million grew to $1,800,000, yielding capital gains of $600,000 and dividend income of $125,000, for a total profit of $725,000. This journey through the stock market was a mixture of calculated risks and rewarding returns, full of valuable lessons and unexpected outcomes. If you like topics on finance, stock, business, and money, and you want more videos like this, let us know in the comments. Don't forget to subscribe, like, and share for more great content to help you stay healthy. How I achieved this profit from my investment. Reaching a significant profit from my $1 million investment was not just about luck or timing. It was a result of careful planning, diligent research, and disciplined execution. I strategically selected stocks with strong growth trajectories and disruptive technologies. For example, my initial $100,000 investment in Apple grew to $250,000, while $50,000 invested in Tesla turned into $200,000. In the healthcare sector, Pfizer and Amgen also performed well, with investments growing from $50,000 to $70,000 and $50,000 to $75,000 respectively. Diversification was crucial. By spreading my investments across various sectors, I mitigated risks associated with downturns in any particular industry. For instance, while the energy sector faced volatility, the technology and healthcare sectors provided substantial gains. Investing in companies with global operations reduced the risk associated with any single economy. Companies like Apple and Microsoft have diverse revenue streams across multiple regions. Regular monitoring and periodic rebalancing ensured my portfolio stayed aligned with my investment goals. Staying updated with market trends and economic developments helped me anticipate market movements. For example, the rise of renewable energy led to timely investments in companies like NextEra Energy. Understanding technological advancements and their potential impact on various industries guided my investments in innovative companies poised for growth. Emotional discipline was essential. During market downturns, I maintained composure and avoided panic selling. For example, during a market correction, holding on to quality stocks rather than selling at a loss paid off when the market rebounded. Keeping a long-term perspective helped me weather short-term volatility, focusing on the overall growth trajectory of the investments rather than day-to-day fluctuations. Analyzing investments that didn't perform well provided valuable lessons. Understanding the reasons behind underperformance, such as misjudged fundamentals or market conditions, helped refine future investment decisions. The investment journey involved continuous learning and improvement. Adapting strategies based on experiences and new knowledge was key to achieving better results over time. Summary of my total gains. After several years, the portfolio grew significantly. My initial $1 million investment turned into $1,800,000, yielding a total profit of $725,000, including $600,000 in capital gains and $125,000 in dividend income. How to invest $1 million on stocks. Form the backbone of every investment portfolio. How much of your portfolio you allocate to stocks depends on your goals, time horizon, and risk appetite. If you have a high tolerance for risk, you might invest in individual stocks. If you're more risk-averse, you might opt for equity mutual funds or exchange-traded funds, ETFs. Equity investments can take many forms. Growth stocks are companies rapidly expanding their revenue, profits, and cash flow at rates well above the rest of the market. On the other hand, value stocks trade at prices much lower than their fundamentals suggest due to market conditions beyond an individual company's control. Then there are dividend stocks, where companies return profits to shareholders through dividends. The best dividend stocks offer double value to investors by providing income and the potential for share price appreciation. Lastly, preferred stocks are different from common stocks as they have a set face value, called par value, unrelated to their current market prices. Preferred stocks always pay dividends, calculated as a percentage of the par value. With guaranteed dividends and greater protection in the event of bankruptcy, preferred stocks are a favorite among long-term investors. Look at my $1 million journey. Investing $1 million in stocks was a challenging yet rewarding experience. It reinforced the principles of diversification, patience, and continuous learning. While the journey had its share of ups and downs, the overall outcome was positive, highlighting the potential of the stock market for long-term wealth creation. For anyone considering a similar investment, it's essential to have a clear strategy, conduct thorough research, and be prepared for the inherent volatility of the market. The lessons learned from this experience are invaluable, providing a foundation for future investment endeavors. This is Finance Spotlight brought to you by ThinkSpace Media. If you found this video insightful and are eager to learn more about achieving financial milestones, don't forget to subscribe to our channel, like this video, and share your thoughts in the comments section below. Together, let's start on a journey towards financial success.